Hey, welcome to the Closing Beat, everybody. Happy Monday. How's it going out there? That's what it is. Camera's too high. Welcome to our show. We call it the Closing Beat, quick stock market update show to go over what the markets have done. We like to teach here as well, so we're going to be going over some interesting things. Try to teach you guys a little bit as well. So I hope you enjoy. If you do, you hit the subscribe button. All the things that the YouTubers ask you to do, I will ask you the same. I always forget to do that. Hey, if you want to play a game, it's called Guess the Dow. You can tell me where you think the Dow is going to close next week. If you're the closest without going over, we'll send you a $100 gift card. Our winner last week was not a customer, Tony Y, 29455.35. Chose the gift card. So congratulations there, Tony. Awesome. Also, if you're one of our customers, check your email. Right? I'm making it a point. There's a lot of moving targets going on right now. And when I learn something new and I learn a strategy that we can use, I'm going to bring it up to you. I'm going to just send you out an email. So today was one of those. And let's just say you're going to want to check it out. Right? Got some things to address. We may even address it this week in the Wine and Wealth class. Every week I like to do classes for customers just to let them know, here's the advantage. This is what's happening. This is what we need to do. This is how you adjust your dough so that you make sure you make the most out of it. That is my job, whether I agree or disagree. Which I happen to disagree with what happened today, but we'll address it. Anyways, hey, stock market. It's kind of the same thing that happened last Monday, right? Mondays have been where all the gains have been coming. I shared that chart with you last week to kind of show if you missed Mondays, you pretty much had half the gains for the year so far there. But basically the same thing. We'll go over the charts and take a look at it here. We got a vaccine announcement on Monday. We got a pop. We got a vaccine announcement this Monday. We get a pop. I'm going to start over. I'm just going to just do it again. Last week it was Pfizer. This week it was Moderna. And we were already one step ahead of that. I want to show you real quick what we shared in our Notes from Jazz email. This is an email that goes out every single weekend. And just to make it simple, what I did is I broke down the difference between Pfizer and Moderna, the studies, their vaccine and everything that was happening in there. Basically what I said here was, first, on Monday, Pfizer announced preliminary vaccine efficacy results. I can't talk today, which is basically smart people talk for, hey, this is pretty effective in 90% of the test subjects. Now, I caution it was just a press release. In the biotech world, you should take that with a grain of salt. But why did the markets bounce so much? Because 90% effectiveness rate was way higher than we all expected. Even if they're being a little bit more optimistic, it's still a bit better. I also put in there, slight side note, Moderna also announced that it hit their preliminary endpoint triggers for its vaccine. This is just biotech talk for, hey, we're just about at the same place as Pfizer just said they were. And the reason that that's important is because their vaccines are somewhat similar. Now, the difference between what they said today, we talked about that over the weekend, but the difference is what they said today is they're able to get the same, or much better success rates actually, but they don't have to store their drugs so cold as basically Pfizer has to keep it at minus 100 degrees Fahrenheit. So that was a little bit better news if you ask me in terms of the vaccine world, if you want to keep up with that. If you're one of our customers, you go right in the dojo, read that email there. But nonetheless, that's what's going on today with the market. The S&P breaking almost to new highs, didn't quite get there. 86% of the S&P is above its 50-day moving average there. We are closing in on 15% gains year to date. Half of those gains coming in the last 3 months, believe it or not. So if you missed out on the last 3 months because you're like, election's worrying me, virus is worrying me, you literally have half the gains that everybody else has at this moment. So don't invest emotionally. If we look at the Russell 2000, that's your leader. The Russell 2000 continues to be the leader. Across the board, very strong in the Russell 2000, but I want to point out your small cap value. Small cap value outpaced every other factor in the market today. Large cap value, large cap growth, which has been exciting for a while. Large cap growth was actually the smallest or the worst performing area today. Still positive, but worst performing area overall. And if you look at small cap growth, I just use an ETFs to show that to you. Also very strong, just today was outpaced by small cap value. Been talking about this last week, been talking about it on the research site, been talking about it in our Notes from Jazz, that rotation into value stocks, in particular small cap value, is something that you certainly got to pay attention to, or at least recognize that it's there. If you don't want to do anything about it, that's up to you. All right, you got the Dow almost back to new highs there as well. Thanks mostly today to Boeing. Great pop on Boeing, huh? All of you patient investors there finally getting paid off a little bit as Boeing continues its move. Honeywell also looking pretty good there as well. With Boeing, it's basically the vaccine news, excitement that people can get back in the air, planes can start flying again. You've also got FAA progress on getting the 737 MAX back into the air overall around the world, so that's good news for them. Little bit of a drag in biotech. right, today. So Amgen sold off a little bit. That's going to drag the Dow just a touch. And Merck lost 1%, also just dragging things down by just a little bit there. If you like FinTips videos, which we do every other day, you're going to like this week's. We got some interesting things to cover. The first one today was, what's a withdrawal rate that's actually safe given an exact scenario? So you always say the 4% withdrawal rate there. We actually went through and built a model to say, okay, what if you're just a single guy? Here's your life. Here's what's going on, your average salary, everything else. What's your withdrawal rate? What does it actually turn out to be where you can survive? Is it 4%? It's nowhere near 4%. So I'll show that with you to kind of explain how the withdrawal process also helps your withdrawal rate. On Wednesday, we're going to cover what happens if you're forced to retire early. 4 million of you have been forced to retire early that are over the ages of 55 years old. And boy, that's a tough time to have to retire early, but I've got some tips for you to check out there. And then Friday, I'm going to share with you stock market performance based on election results. It's actually a review of a class that we did for customers about a month ago. I'm going to share that data with you guys publicly so you can see what to expect from the market going forward. Okay. In the research site, if you want to join the research site, jazzwealth.com/research, there's a new post in there about a breakdown of the earning stocks in the retail sector that are due to report by the end of this month. So we're actually going through and we're saying, okay, those stocks are due to report earnings. How do they perform? Breaking down all the stats and everything that you want to see. It's retail time for earnings season. Later on in our watch list, I'm actually going to go through the specialty retail section to kind of give you a glimpse of some of the things that we talked about in there, but also teach you guys something a little bit special as well, because you're here watching and I appreciate that. Let's go to the sector breakdown here for the day. I'm going to dive in. We're just going to go right to it. The sector rotation continues out of tech, out of communication services, although they were higher today. They were the bottom end of the list in terms of performance. The money is moving over to energy, as we've been talking about, moving into industrials and also financials, looking really good there. Let's start with energy here today. Back to the 200-day moving average. Chevron is one of the better performers, breaking above the 200-day moving average, and ExxonMobil, one of those better performers as well, adding about 6% on the day. The best performers, by the way, were the ones that I've already shared with you on a list last Tuesday. So last Tuesday, we talked about, very interesting that stocks like these stocks gained this much, but on one day, by the way, 11.9. But we're also some of the worst performers year to date. So when you look inside of this, you're going to have National Oil Well, Holly Frontier, Valero, Diamondback Energy. These were the better performers today. Very interesting. So that money, that rotation continues. We look at something like FANG, Diamondback Energy here. You had a 7% gain on the day. The money has been going into the worst performers. In other words, value. It's been going into value. We just mentioned a second ago, large caps, mid cap, small cap, value are all leading the way forward. Where is that value? Well, if you're looking in the energy space, now you've got a few names to take a look at there. Valero, great day for Valero, up over 10%, or almost 10%, over the 200-day moving average. And so it's just so much fun to share stuff ahead of time, or findings ahead of time that you can use going forward. I'm not telling you to buy stocks or anything. I just like to point out what's happening and let you make your decisions from there. Industrials higher, basically on the Boeing pop today, more of a convincing bottom in Boeing, more people excited to say, okay, I'll take my shot here on Boeing. By the way, industrials has been outperforming the market over the last 1 month, 3 months, 2 months. However you want to look at it, anything less than 6 months, the industrials are outperforming the market and continue to do so. Financials, very convincing little bottom here after the breakout last week, looking really good. Very happy with this one. If you're in the financial space, even Wells Fargo played along today. 3.5%, that's not bad. I mean, this is the worst performer in that space, and even that stock is starting to get a little bit of money, so looking good there. But financials, still the second worst performing sector year to date. It's recovered all but 8%. This thing, remember, it was down over 30%. It's recovered all of it except it got 8% more to go. Healthcare didn't really participate today. That's going to be your only negative sector on the day. It's just a couple pullbacks there. Pfizer pulled back, right back into support there. It's kind of a clean looking pullback, actually. Eli Lilly also sold off about 1%. Those stocks kind of hurt today. There wasn't really a lot of action over there, so that sector was your one weak sector for the day. All right, let's go over to the watch list here and take a look at some things here. On the research site, we do have that retail post about all the stocks reporting earnings. I put all the data, the odds of them beating, their success rates, the stock performance, the volatility. I put it all in a very simple, easy to read chart so that if you own one of those stocks, you know what to expect coming up. I also broke it down to show you some of that, and just instead of giving you a table, I actually went through and said, here's what to see and here's what's interesting and what's not interesting. So what we're going to talk about today is the specialty retail stocks. There's actually 7 that I want to focus on. They're on the right-hand side of your screen there, and we're going to start with Ulta. Ulta Salon, actually 88% beat rate. Average move is 4.8% on a full day performance there. If I go over here, what I'm going to share with you, and you could probably see it better if I go this way, a little bit bigger. There you go. On evaluation, we put their price to earnings here. From a valuation standpoint, a little bit expensive compared to its peers. These are their peers here. So I put their price to earnings there relative to the others. It's not the most expensive, but it stands out there as one of the more sort of expensive ones there. We're going to look at GAP. That's next. GPS is the ticker symbol. This one happens to be the highest yielding, 4.4% there. Earnings come out November 24th. It's actually been performing quite well on a tear this year, actually. If you want to look at a chart real quick, let me just take a look. Almost back to new highs. This move here off the virus low, very impressive. It was a really, really good move there. So not disappointed in that one. All right, you got Best Buy. Just moving down the list here. Best Buy is the least expensive on a fundamental basis there. It's pulling back from a slight overbought condition there. So one way to look at it is to go here. You can see it's pulled back 5% over the last month, still up nicely over the year. And if you were to look at the chart, you could probably visualize it there. It just had a nice little run that's been a little bit choppy. We don't know about the holiday season yet. People aren't too convinced to go buying at these prices. Still a decent price in this area, but you can see most people are waiting on a pullback there, and hopefully they get it. Ross Stores here, fundamentally pretty expensive, one of the higher valued stocks compared to its peers there, but it's also the best performer over the last month, up 12%, recovering almost all of its year-to-date losses there, almost back to positive for the year. Let's take a look at the chart real quick, just to give you some help there. There you go. You're going to have that gap right there from last Monday looking good, continuing to sort of convince people that it's no longer dead money. That sideways movement there bugs me to death. It's dead money. Now it's waking up. Everybody's excited. And you go, hey, it's one of the better performers looking good. Earnings results or earnings expectations for next year, also quite impressive there if you want to take a look. Limited Brands is going to rank as the best performer here year to date on hopes of the, I always say it wrong, Bath and Body Works spinoff. They've been talking about spinning that off. Looks like they're moving towards that. People like that idea. Adds a whole lot of value for the company. And so it's the best performer overall there. Earnings expected to be a little bit lower compared to their peers next year, but still respectable. I'm not going to knock that. Moving on to Lowe's here. If you got Lowe's, this stock has been outperforming Home Depot this year, 33% versus 27% on Home Depot. I maintain that that's odd. Usually Home Depot leads the way there, so I don't know if there's a shift going on there. They did really put a lot of effort into their pro software there. You know how if you're a contractor, you can go on Home Depot's website and actually order stuff, then go to the side of the store and then bring all the stuff out. Well, Lowe's has been really pushing that to get contractors that better pricing, better service and everything. And I hear it's going well. I mean, if you look at their financials, it's going really well there. So no complaints. We'll go to TJ Maxx here as the next one. This has the largest growth potential next year. That number's right, actually, and it's just because of a tough year this year. Also, they're doing some share buybacks. That's going to affect this earnings per share next year, so something to keep in mind. And Home Depot has been your steady Eddie specialty retail stock there this year. Not so impacted by the virus, of course, because they were able to stay mostly open, very brief closures there. The stock is basing up near highs here, hinting at a new breakout. So if you look at that stock, it's up 27% for the year, but if we break out, maybe it goes to 35, 40, something like that. I don't know, just like to point it out. And that's basically your watch list for the day. Specialty retail stocks and the earnings that are upcoming. These stocks all have earnings coming up, so expect them to be a little bit volatile around those earnings, and hopefully that helps you there. All right, we're going to do stocks in the news. Yep. We're going to do stocks in the news, and then I will move on to taking your questions there. Let's see what we can do. All right, so first up, we're going to have Home Depot. Home Depot there is going, so this is kind of interesting. They used to own Home Depot Supply. They started it. Then they sold it, and now they're buying it back, right? So they want back into the distribution game there, and that's the stock that's in the news today because of that. Also earnings. Don't forget earnings coming up. Target got a little bit of a boost today, 1.4% there. This is one of the dividend aristocrat stocks. Pays very consistent dividends there. And in fact, tomorrow or ex-dividend day is 0.6. They're paying out 68 cents. So got that dividend coming. Anyways, Barron's was in the put the stock in their articles over the weekend there. And Barron's says that the stock here at this price is still undervalued. And so that's the reason for a little boost today. You got Tyson Foods in the mix there. They beat earnings by 62 cents. Guidance as expected. Revenue better than expected. See how it's a little bit behind the rest of them? Everybody else that was flat dead money broke out already last Monday. This one's yet to do it, but that's good news for them, I guess. You know, maybe it's waking up. You got Casper, the mattress company that ships you a mattress in their box there. Kind of interesting. Mattress sales and mattress recyclables has actually been off the charts. All right, so the fact that Casper reported earnings there, Casper missed by 5 cents, revenues came in weaker than expected, and they lowered guidance. Not good news when you look at the mattress industry as doing really, really well since the virus lows there. So that's the reason you got that one hitting just a little bit, taking a hit today. AT&T, like them or love them, they are considering the sale of CNN. They are publicly making that disclosure and looking for, that's a fancy way for them to say, anybody want to buy it? We're considering a sale and seeing if anybody comes along to buy CNN. And lastly, just coming out here, do you own Costco? If you own, yeah, no, that's it. Okay, so if you own Costco, they are going to pay out a one-time dividend of $10 per share. So if you own those shares, you're getting $10 there. Should be coming out to you. That's pretty cool. I love it. All right, I'll take your questions here if we can. Before we do that, you got Home Depot, you know already, with the earnings coming up. JK Solar, Kohl's, Legg Mason, Walmart, and Lazy Boy all reporting. Valero, 98 cents. Isn't that kind of interesting? The bigger gainers today. Con Edison, 77 cents. Marathon Petroleum, 58 cents. Aflac, 28 cents. And the Target that we talked about, 68 cents. There you go. All right, let me see if I can answer some of your questions, and we'll get out of your way. I like it. McDonald's selling Beyond Meats in Canada. I believe they still have a few stores that are doing that. They're working on a deal to try to extend that. There's no official reporting from McDonald's to say that they are going to extend that deal with them, but there you go. I put the CNN news in there because I knew some of you would like that. I knew there'd be a comment in there about CNN. I did that for you guys today. Doesn't really, you know, it didn't move the stock or anything. I just thought, that'll get the chat feature fired up there. I love it. You gonna try an Impossible Burger? Not me. Nope, I'm not doing it. Nope, been saying that for 1.5 years now. I'm not doing it. I can't. I just, I don't get it, you know? It's weird. But you guys can make fun of me on that one. Does Justin like Apple? Yeah. Yeah, right? That's, you know, there's a ban button, right? You can kick people out of the room. So Apple, right? You got a number of announcements that just came out. 5G is all the focus going forward here. Stock's really kind of flat. There's no real major catalyst. We're digesting the iPhone sales and everything, and that happens. It usually gets a little bit calm around there. Always buy into the rumors, sell into the news, and that has happened. That even happened this time here from the iPhone announcement. Yep. I love it. That would be interesting. Trump buys CNN. Can you imagine that headline? Trump buys CNN, promptly shuts it down. Writes it off in a bankruptcy. Just out of spite. Oh. I love it, man. Cool. No, that's funny. I love it. Dr. Horton represented in the video there. Yep. I love it. Berkshire Hathaway's actually, well, no, I'm going to do the B shares there. So Berkshire Hathaway actually hit new highs today, if you're taking a look at that. This is the largest weighted stock in the financials. So it's obviously good news because it's moving the XLF. Berkshire Hathaway is a big portion of the XLF. I don't have the exact number, but I'll pull it up here for you. And so that's actually good news for them. If you're in the financial space. That means you don't need Wells Fargo to kind of kick in there. You got 15% of the XLF is Berkshire Hathaway. So even if Wells Fargo or the exchanges, remember the exchanges we showed you last week, your not Simon Property Group, your S&P Global, if those guys still struggle a little bit, then you've got Berkshire Hathaway able to pick up the slack. So it really depends on what you're doing there. If you're in the financial space, you're happy. If you're in individual stocks outside of Berkshire, maybe you're not so happy there, but that's what you got. Yep. I love it. I love it there. Cool, cool. What happened? Did Tesla, oh, look what happened. So Tesla, good for them. Where's Harry? Oh, man. Is that for real or is that just some sort of spoof? No, the S&P has announced it will add Tesla. How about that? Good for them. Yep, stock's up about 8-9% after hours. It's going to be added to the S&P. That is your news. I'm assuming that is correct. That's direct from the S&P Dow Jones Indice. Yep, S&P Global, I'm sorry. How about that? Yep, all right. Is Harry not here today? Oh my God, did he miss it? Oh, he's going to be on fire tomorrow. All right, I'm going to get my rest so we can deal with Harry tomorrow. All right, you guys enjoy the rest of your day. Thanks so much for watching, and we'll see you guys tomorrow.